Okay, let's unpack this. Um, Imagine a world where every transaction you make, every single penny you spend, isn't just digital, but it's directly linked to your country's central bank.
Sounds a bit like science fiction, doesn't it?
It really does.
Yeah.
But, well, it's quickly becoming a very real possibility. And the fascinating sources you've sent us, they raise some really profound questions about freedom, about control in our financial future.
Mm.
Today, we're taking a deep dive into central bank digital currencies, or CBDCs. You've given us some excellent material, including a detailed YouTube analysis from Coin Bureau. And our mission today is really to understand what CBDCs are, why governments seem to be pushing them, and importantly, what they could mean for you.
Right.
We're going to try and apply the Feynman technique here, break things down simply, point out where we maybe still have gaps in understanding, and connect the dots with some clear examples.
And what's particularly striking, I think, is just how quickly this whole topic has moved from, theory, just discussions, to actual concrete implementations across the globe. So we'll be connecting those dots, looking at the various global developments and exploring the potential implications, the intended ones, and maybe some unintended ones too, as we navigate this complex digital currency landscape.
Okay, so let's start right at the beginning. The absolute basics. What exactly is a CBDC? Because, we use digital money all the time. My credit card, my banking app, that's digital.
Right.
But that's not a CBDC. So what's the fundamental difference here?
Okay, so in simple terms, most of the digital money you use today, like from your bank account or credit card, that's created by commercial banks. You can think of it as private digital money.
Okay.
The only actual central bank money that we, the public, can currently hold and use is physical cash, notes and coins.
Got it.
A CBDC, then, is a digital form of currency that's created, issued, and fully controlled directly by a nation's central bank. It's essentially aiming to be a digital version of the cash in your wallet.
But issued by the government's bank, not a private one.
Exactly. Straight from the source, so to speak.
Okay, now here's where, according to the material you sent, it gets really, really interesting. It seems central banks might actually be terrified that commercial banks could end up with total control over digital currency once physical cash disappears, or mostly disappears.
Mm-hmm.
And their solution seems to be this digital cash that they control. Which brings us straight to this crucial difference.
Control.
Precisely. And that's a key word here. With physical cash, you have, well, a high degree of anonymity and direct control over your transactions.
Right. Nobody's really tracking that tenner you spend at the shop.
Exactly. The sources really highlight that with CBDCs, you would likely have neither anonymity nor that same level of direct control. We saw that quote from the European Central Bank President Christine Lagarde, where she apparently admitted the digital euro would be used for control.
Yeah, I saw that. Though the ECB then tried to kind of soften that statement, didn't they? Promise privacy. They did try to walk it back. But a key detail from our research suggests that when officials talk about CBDCs preserving privacy, they often mean privacy from commercial entities, like other banks or companies.
Ah, so the commercial banks won't see it.
Right. But the central bank, the issuer, they absolutely will see it. That seems to be the implication.
Okay, let's try an analogy here to make this clear. So analogy 1. Using physical cash is maybe like having a totally private conversation in a soundproof room. No one else hears.
Okay.
Using your typical digital payment, like a bank transfer, is maybe like talking in a busy cafe. The cafe staff, the bank, might kind of overhear, but the government isn't directly listening in on every word.
Right. Not usually.
But a CBDC, based on what we're reading, seems more like talking in that same cafe.
Yeah.
But now there's a central bank official sitting right there at your table, taking notes on everything you discuss, your transactions.
That's a good way to picture the potential difference in visibility, yeah.
Yeah.
And the material also distinguishes between two main types. You've got wholesale CBDCs, which are mainly for transactions between financial institutions, maybe big corporations, potentially even other countries, sort of the elites system, you could say.
Right.
And then you have retail CBDCs, designed for everyday people, for you and me to use for daily purchases.
And naturally, the retail ones are where the biggest concerns about monitoring and control seem to lie.
And that's what the sources indicate, yes. Those are the ones with the potentially more terrifying attributes regarding universal surveillance.
Interestingly, though, some sources note that quite a few central banks seem to be maybe shifting their immediate focus away from retail for now and more towards wholesale CBDCs.
Mm-hmm.
And the thinking might be about joining global payment systems like mBridge, that BRICS initiative, and possibly trying to bypass the U.S. dollar in international trade.
That's a plausible driver, yeah. Using wholesale CBDCs for cross-border efficiency and maybe shifting geopolitical balances. But the warning from the sources is pretty clear.
Don't get complacent.
Exactly. A focus on wholesale today doesn't mean retail CBDCs are off the table for tomorrow. They could easily pivot back once the infrastructure is more developed.
Okay, so this leaves me with a pretty big knowledge gap right here. If central banks really think CBDCs give them better control, how exactly would that control work for the average person with a retail CBDC? Beyond just seeing transactions, what specific policy tools or, I don't know, restrictions might be built into this digital currency? That's not entirely clear yet.
That is a crucial question, and probably one central banks are wrestling with too in terms of design and communication. And if we connect this to the bigger picture, it really highlights a fundamental tension we see emerging: convenience versus autonomy.
Right.
Because the push for CBDCs is often framed around efficiency, modernization, faster payments.
Yeah.
All sounds good.
Yeah.
But the underlying motivation for the central banks themselves, it seems, according to these sources, is really about maintaining their power and influence in a world where physical cash, their traditional domain, is fading away.
Okay, so with that basic understanding, let's look at how this is actually playing out. Because this isn't just theory, right? These are real projects happening now around the world, and they seem to vary wildly.
Absolutely. It's a global patchwork.
So let's start North America. In the U.S., CBDCs have definitely become, well, a political hot potato.
Very much so.
The research indicates, many Democrats seem supportive, while prominent Republicans, including figures like Donald Trump and RFK Jr., are actively rejecting them. We've even seen actual legislation like that bipartisan bill passing the House against CBDCs and a Louisiana state law banning them.
Right. And the Federal Reserve, meanwhile, is trying to maintain this stance of being impartial. But
It's always a but.
well, they've published papers suggesting the U.S. dollar could lose its global dominance if it doesn't have a digital counterpart, a digital dollar. This led to some pretty intense questioning for Chairman Jerome Powell.
I bet.
And what's often not said explicitly but pointed out in our material is that the Fed's new FED Now system, that instant payment rail,
Yeah, I've heard of that.
well, some believe it could potentially evolve into a CBDC system down the line. Its creators have apparently even hinted that might be the end game.
Wow. Okay. And here's a really crucial point from the sources regarding stablecoins.
Yeah.
The privately issued digital currencies pegged to the dollar. The argument that stablecoins would hurt U.S. dollar dominance. The source says that's actually further from the truth because USD stablecoins are backed by U.S. government debt.
Right. They create demand for dollars and treasuries.
Exactly. So they would actually boost the dollar's role. And this is apparently why some Republicans are now leaning toward supporting crypto, specifically stablecoins.
Interesting political alignment there.
But here's the kicker, according to this source. Stablecoins aren't that different from CBDCs when it comes to control. They might have similar monitoring or freezing capabilities just run by private companies instead of the government.
So, different issuer, potentially similar controls.
Yeah, which suggests maybe a hidden agenda behind some of the pro-crypto push if stablecoins with these controls are the main focus. Very interesting angle.
Now, if we move south to South America and the Caribbean, the picture is quite different. Development seems more limited, or at least has faced significant hurdles.
Like Venezuela's Petro.
Exactly. The Petro coin, launched to bypass U.S. sanctions, supposedly backed by oil. It was phased out after about 6 years, mainly due to, well, heavy government control over its supply and lack of trust. It's a stark warning, really.
And what about the Bahamas? They were the first, weren't they? With the sand dollar CBDC back in 2020.
They were the very first nationwide CBDC, but adoption has been incredibly low, like less than 1% uptake.
Wow, less than 1%.
Yeah. And now our sources reveal they're actually looking at ways to force commercial banks to adopt it and push it out more, which kind of echoes that potential Fed plan to push banks towards integrating FED now, doesn't it?
It does. A bit coercive, maybe. Now, Africa and the Middle East.
Similar challenges in some places. Nigeria's Naira is still wrestling with its rollout. Very low adoption there, too, even despite government crackdowns on physical cash use, which led to social unrest.
Yeah, I remember reading about that.
And even if Nigeria pivots to, say, a stablecoin model, the material reminds us the core control mechanisms could remain quite similar.
So just changing the wrapper, potentially?
Potentially. But it's not all slow going. The UAE and Saudi Arabia are making pretty significant moves, especially with wholesale CBDCs. They've joined that mBridge project we mentioned.
Okay, so that's a clear signal, possibly geopolitical shifts.
It certainly looks like an effort to build alternative cross-border payment rails, potentially reducing reliance on traditional systems. And then there's Israel, considering something quite unique, an interest-bearing retail CBDC.
Interest-bearing. That sounds odd for central bank money.
It is. Most central banks avoid it because it could destabilize commercial banks. People might pull all their money out to hold the CBDC if it pays interest. But Israel has a relatively low debt-to-GDP ratio, which might make them feel more robust against that kind of shock.
But they're waiting.
Yes, the sources say Israel is basically waiting for another Western nation to go first with a retail CBDC, specifically watching the European Central Bank.
Fascinating. Okay, let's jump over to Asia and Oceania. China's digital yuan, the e-cny, gets a lot of headlines.
It does. They've been quite aggressive, using it for things like cross-border gold trades, paying for a rail link with Kazakhstan, really pushing the use cases.
And get this, British and French banks, Standard Chartered and BNP Paribas, are actually participating in China's CBDC trials.
Yeah, that's a significant development. It really hints at potential geopolitical realignments, maybe European banks hedging their bets or seeing opportunities with BRICS nations.
One source used a pretty powerful, maybe slightly chilling analogy for China's rollout.
What was that?
It said, as with all totalitarian revolutions, the first people to be affected will be those who supported the initiative. And it mentioned reports that China is now investigating the digital yuan's own creator.
Wow.
Then it affects us plebes who will refuse to use it, noting reports of Chinese workers quickly exchanging their digital yuan for physical cash whenever possible.
A form of resistance.
Yeah. And even criminals are affected, though the source dryly notes they might still operate so long as they're part of whichever elite is in power. Oof.
That's quite a perspective. And India.
India, surprisingly perhaps, seems even more aggressive than China in some ways. Over 5 million Indians are apparently already using the digital rupee, thanks to multiple pilot programs.
5 million? That's significant adoption already.
It is. And they're focusing on cross-border uses and even offline CBDC payments, which is technically quite challenging. Even the crypto exchange Bybit added support, which is interesting given India's generally hostile stance towards other cryptos.
Suggests the government is really pushing the digital rupee hard. And finally, the UK and EU.
Both seem to be pressing ahead with their plans, the digital pound and digital euro, despite pretty significant public opposition, especially around privacy concerns.
Right. We saw that huge response in the UK consultation.
Exactly. And the Bank of England has also apparently shifted focus somewhat towards wholesale CBDCs for now, maybe worried about British banks potentially adopting foreign digital currencies if they don't offer their own alternative.
Whereas the ECB seems less concerned about that, maybe, given the French banks participating in the China-Hong Kong trials.
Seems that way. So, okay, let's try another analogy to tie this section together. Analogy 2. The global rollout of CBDCs feels like a massive, uncoordinated global experiment in financial control.
Yeah, like lots of different labs running different tests.
Exactly. Each country is a different lab, testing different approaches with different goals. Some trying to bypass sanctions, some focused on inflation, others maybe on global influence. And the results are just incredibly varied from, total flops like the petro to rapid adoption like we're seeing hints of in India.
All with these underlying questions about personal freedom and surveillance just hanging in the air.
Precisely. Which leads me to another knowledge gap that really jumps out from looking at these cases. Given the really low adoption we've seen in places like Nigeria and the Bahamas, what specific concrete steps might central banks take to actually force the public to adopt retail CBDCs? Beyond just making cash harder to use, what other mandates or maybe even penalties could they realistically employ? And what would be the social and economic fallout from trying to force it like that? That seems like a really critical unknown.
It really does. And that brings us neatly to the current situation, this kind of tug of war that the sources describe.
Right, the battle between central banks wanting their CBDCs
and commercial banks, big asset managers pushing their own solutions, mainly stablecoins.
And the statistic that 94% of central banks surveyed are working on some form of CBDC.
That's huge. It strongly implies we're almost certainly heading towards some kind of pervasive digital currency system, as one source puts it. The big question isn't if, maybe, but who will be in control?
Governments via CBDCs. or corporations via stablecoins?
Exactly. And the answer the material suggests is likely going to be a mix. It'll probably vary country by country. Some, like Indonesia, are quite explicit. They see CBDCs as a tool to combat stablecoins and crypto.
Pushing back against private alternatives.
Yes. While others, like Switzerland, seem more comfortable letting stablecoins coexist, perhaps under stricter regulation.
This raises a really interesting kind of philosophical point from the research. In theory, right, CBDCs could actually be better for preserving freedom if the rules, the controls, were decided democratically.
How so?
Well, the idea is most people would probably vote for minimal controls, maximum privacy, right?
Probably, yeah. Makes sense.
But, and here's the catch, highlighted via the Bank for International Settlements, the BIS. Those same people, if given the chance to vote, might also vote to just print more CBDCs for themselves. You know, helicopter money.
Potentially leading to massive inflation and financial instability.
Exactly. So it's this double-edged sword. Democratic control sounds good for privacy, but maybe bad for economic stability.
Okay, so what about the other side? Stablecoins controlled by private companies?
Well, the theory there is that private issuers would want to minimize controls to encourage people to actually use their stablecoin. Maximize adoption.
Makes business sense. Fewer restrictions, more users.
Right. However, controls could still be imposed, maybe suddenly, if the issuer needs to protect its own solvency. Remember, stablecoins are often backed by assets like government debt.
Okay, so what's the risk there?
The risk is, imagine a big shock to the system. Say, government debt suddenly look much riskier, maybe they're rising exponentially. Confidence in the stablecoin, which holds that debt, could collapse.
It's like a run on the stablecoin.
Exactly. People rush to sell, forcing the issuer to sell off huge amounts of government debt quickly. This could cause massive volatility, maybe even crash the financial system, because that same government debt is used as collateral for trillions in other loans.
Wow, okay. That's a systemic risk.
And this is where the sources drop a potential bombshell. It's actually possible that the next major financial crisis could be triggered by a major stablecoin issuer failing because of some external shock like that.
A stablecoin collapse causing the crisis.
Yes. And then, the sources speculate, the crisis could be used as the perfect scapegoat by governments worldwide to justify rolling out their own CBDCs much faster and more widely. See, private digital currency is too dangerous. We need the official, safe version.
Using the crisis to push their preferred solution. That's a concerning thought.
It really is. And it leads me to my next knowledge gap. If that hidden agenda theory about stablecoins having control similar to CBDC is actually accurate, what specific regulations or maybe technological features allow these private companies to exert that kind of control? How does it work? And how would that private control practically differ for me, the user, compared to central bank control? Is one meaningfully better or worse in day-to-day reality?
That's a crucial distinction to understand. So it really does feel like some form of pervasive digital currency, whether it's government-run CBDCs or corporate stablecoins, is likely on the horizon for many of us.
Yeah, it seems hard to avoid it entirely.
So the core challenge becomes, how much control will these systems actually implement? And maybe more importantly, how can we as citizens best navigate this changing landscape?
What do the sources suggest? Are there ways to push back or prepare?
Well, they offer several concrete actions. The most effective one, according to the material, is to actively vote. Vote against politicians who openly support CBDC rollouts with features you oppose.
Okay, use the democratic process.
Exactly. Options might seem limited sometimes, but the U.S. situation shows it is becoming a major political dividing line, which could create more choices and opposition over time.
What else?
You can also look for opportunities to give direct feedback. Like those 50,000 people in the UK who responded to the Bank of England's consultation on the digital pound plans. Make your voice heard directly to the central banks when possible.
Okay, direct feedback. That makes sense.
And critically, something very simple but maybe very important. Use physical cash more often.
Just use cash.
Yeah. The argument is if we don't use it, we'll lose it. Phasing out cash seems to be a key step in smoothing the path for CBDC rollout in many places. So using cash helps keep it viable.
Right, maintain the alternative.
Exactly. And ultimately, if all these preventative measures aren't enough and CBDCs are rolled out anyway with features people find unacceptable,
Then what?
then the sources suggest, following the example of people in places like Nigeria and the Bahamas who faced rollouts they didn't like, simply don't use them.
Just refuse adoption.
If possible, yes. Mass non-eruption. That last line of defense, as the sources put it, might actually be the most powerful one individual citizens have.
Wow. Okay, this is definitely a future that requires us all to be really engaged and make informed choices, isn't it?
Absolutely. It's about understanding the tech, yes, but also the motivations behind it and the potential impact, positive and negative, on your daily life and your fundamental freedoms.
What an incredible deep dive that was. Seriously. From just the basic definition of a CBDC all the way to this global battleground of digital currencies, we've really seen how complex and, frankly, potentially world-changing this whole topic is.
We really have.
We've explored that drive for control, the surprising similarities maybe between CBDCs and stablecoins, and looked at all the different approaches being tried across continents.
Uh-huh.
Hopefully, this gave you some significant aha moments.
And if we try to connect all these different threads back to the bigger picture, it's undeniably clear, I think, that the future of money isn't just about technology. It's not just about faster payments.
No, it's much deeper than that.
It's profoundly about power, about privacy, and about national and individual sovereignty. And your choices as a citizen, as a consumer, are actually going to play a really significant role in shaping whatever digital future emerges.
So before we wrap up, here's maybe a final provocative thought for you to mull over based on everything we've discussed. If the ultimate defense against a financial system we might fundamentally disagree with is simply not using it, how do we actually protect that fundamental right to choose? Especially if the very currency we need for daily life might eventually become a tool of surveillance or control, making non-participation practically impossible.
That's a heavy question to end on.
It is something to think about. Thank you so much for sharing these incredible sources with us. It's been truly fascinating to unpack these ideas together. We really hope this deep dive has given you a clearer picture and some valuable insights to consider.
Absolutely. And we strongly encourage you to continue exploring these topics. Keep asking questions, keep learning.
Until next time, stay curious.